Ladies and gentlemen, good day and welcome to the Parag Milk Foods Limited Q4 and FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this call is being recorded. We have with us today the management team of Parag Milk Foods Limited, represented by Ms. Akshali Shah, Executive Director, Mr. Ankit Jain, Chief Strategy Officer, and Mr. Rahul Kumar Srivastava, Chief Operating Officer. I now hand over the call to Ms. Akshali Shah, Executive Director of the company. Thank you, and over to you.
Good evening, everyone. Thank you for your time today. It's a pleasure to welcome you all to Parag Milk Foods Q4 and FY25 earnings call. I have Mr. Rahul Kumar Srivastava with me, who's the Chief Operating Officer at Parag Milk Foods. He's worked in dairy industry for 32 years, 22 years with Amul, and he was the MD for 11 years out of that. 10 years with Lactalis India. Lactalis is one of the largest dairy companies globally, and he's joined Parag 1.5 years back. I also have Mr. Ankit Jain with me, who's the Chief Strategy Officer. He's joined Parag a year ago. He's worked in Marico for 15 years and Arvind Smart Spaces as CFO for 4 years.
Hi, good evening, everyone.
I'm delighted to share that FY25 has been a milestone year for Parag Milk Foods. One that showcased the strength of our business fundamentals, the strength of our brand, the impact of the strategic choices that we've made over the past few years. It's been a year of strong growth, disciplined execution, and meaningful progress across the board. India is the largest producer and consumer of milk, contributing over 23% of global milk production. As per the IMARC report, the Indian dairy size is estimated at rupees 10 lakh crores and is expected to grow at a CAGR of 14% over the next 8 years. Indian dairy industry has seen a remarkable transformation over the recent past. While milk production continues to thrive at 7% year on year, the sector is now witnessing a strong growth in organized retail, value-added products, considering a shift in consumer preferences towards quality, convenience, and health. During Q4 FY25, the milk prices have increased by 12% year on year and 9% sequentially. As we step into the next phase of our journey, we are not just thinking in terms of dairy, we are evolving ourselves into a nutrition-enriched, protein-led business, which is positioned to meet the evolving needs of modern India and beyond. With robust infrastructure, strong brands, deep consumer connect, and visionary leadership, we aspire to be India's leading dairy FMCG and emerge as a global player in providing high-quality nutritional products. Let me take you through our financial highlights. It gives me an immense pride to announce that we have recorded our highest ever revenue in the year FY25 and for this quarter as well. In Q4 FY25, we have recorded a quarterly revenue of 918 crores, registering a 16% year-on-year growth, driven by healthy 13% volume growth. For a full year, our revenue stood at 3,432 crores, up by 9% year-on-year, with volume growth of 10%. Overall, with our core categories growing by 17% in volume and maintaining leadership position. Besides our top-line growth, we have focused on improving our profitability. Our EBITDA for FY25 stood at 293 crores, a 30% increase over the previous year, with margins expanding by 130 basis points to 8.5% of revenue. On the bottom line, Q4 profit before tax stood at 33 crores, up by 141%, and our PAT was 26 crores, a growth of 167 YOY. For a full year, PAT stood at 119 crores, a solid 31% growth over the last year. Importantly, we have focused on strengthening our balance sheet across all parameters. Our debt net to equity stands at 0.5 versus 0.6 last year. Further to our debt to equity has improved from 2.4 to 1.9 times. Our net cash from operating for FY25 was 212 crores, giving us greater financial flexibility and resilience for future growth. We delivered a broad-based volume growth led by our core categories, that is ghee, cheese, and paneer. Collectively grew by 17% in volume during FY25. These core categories are fundamental pillars of our growth, reflecting the power of our brand and strong consumer trust. According to the IMARC report, 2024 report, Govardhan ghee was commanding a 22% market share in branded cow ghee category, reinforcing its position as a trusted staple in the Indian kitchen. It stands at number one position at 22% market share. Goat cheese continues to hold the fort, maintaining its market share at 35%, a very close neck to neck with its number one. Despite volatility in milk procurement cost, in Q4, average prices rising by 12% year on year to 37 rupees per litre, we navigated this challenge effectively through timely pricing promotion actions, thereby maintaining the YOY gross margins. We procured approximately 15 lakh litres of milk daily. At the heart of the system lies our deep stand-holding relationship with over 5 lakh farmers. Our direct procurement model ensures transparency, fair pricing, consistency in quality, which not only secures our supply chain, but also uplifts the rural livelihood. This model has enabled us to build a sustainable, mutually respectful ecosystem with our farmers. Farmers who are not just our suppliers, but they're also our growth partners. Talking about the quality of our products, we believe that good quality commands a premium, and our consistent focus on quality, purity, and innovation is what sets us apart in the market. We control our entire value chain, ensuring traceability, freshness, and product integrity. Our brands, whether it's Govardhan, Go, Avatar, and Pride of Cows, resonates with our consumers who seek trustworthy nutrition and superior products. This belief in quality is what allows us to not only grow but also command a premium in highly competitive categories. Our relationship with our consumer is built on authenticity and consistency, and we are proud to see growing brand loyalty across urban and emerging markets. Our premium and new age business, which is Avatar and Pride of Cows, also continues to build strong traction. Avatar, our whey protein brand, has grown by 41% year-on-year and approximately 6 times in the past 3 years. Almost 60% of our turnover comes from e-com. It's not only captured in the sports nutrition segment, but we're also very relevant in everyday health-conscious consumers, thanks to our expanding portfolio and digital marketing strategies. Pride of Cows, our niche premium farm-to-home dairy brand with single origin milk, expanded both its reach and product offering. We are now present in 7 cities with Pride of Cows, that is Mumbai, Delhi, Pune, Bangalore, Surat, and Vadodara. With increased presence across quick commerce and e-retail platforms, we are tapping into a fast-moving premium consumer segment. Coming to our distribution network, we have continued to invest in building a robust future-ready distribution ecosystem, one that serves both traditional and consumption channels. In general trade, we have deep presence, geographic reach, and strong distributor relationships, enabling better shelf presence and replenishment. In modern trade, we have built strategic partnerships with key players, improving brand visibility and in-store execution. E-com and quick com have also become a strong driver in our growth story. Apart from these networks, we have our own network where we reach to our consumers directly through our website and mobile applications, reflecting our strong execution and technology for superior delivery service. Speaking of marketing, it's been a key driver of brand building and consumer engagement. We have adopted impact-led strategy with integrated in-content branding, partnering with cultural relevant high-reach properties like Kaun Banega Crorepati for Govardhan and Gochis, Big Boss for Gochis, Maharashtrachi Hasya Jatra for Govardhan, MTV Roadies for Avatar, and celebrity influencers like Malaika Arora for Pride of Cows. The choice of each of these associations was with a clear intent to engage diverse consumer associates, create salience of our brand, and drive trials and repeat purchase. These campaigns were amplified across digital, social, in-store touchpoints to build 360-degree engagement in an omni-channel world. More than visibility, our marketing investment have delivered outcomes, stronger brand recalls, increased modern trade offtakes, and higher digital conversions. Innovation is at the heart of Parag Milk Foods. In FY25 was a strong year in terms of new product development. The best synergy and forward integration for Govardhan Ghee was entering into branded mithai market with the brand Govardhan Khushiyan Mithai. We have also recently launched Chikki, which is made out of Govardhan Ghee in 3 flavors, that is sesame, peanut, and dry fruit. With Go, we have launched flavored yogurt in different flavors. In Pride of Cows, we have launched high-protein, low-fat paneer. With new emerging categories in cheese and fresher cheese. In Pride of Cows, we've launched Bocconcini. In Pride of Cows, we've also launched Greek yogurt with 8 grams of protein. And lastly, Avatar protein bars in chocolate and coffee flavors, which have whey protein isolate, and each bar has 10 grams of protein. These launches reflect our sharp consumer focus, deep market understanding, and strong in-house R&D. They are helping us drive both vertical within the existing categories and horizontal expanding into newer consumption occasions. Our innovation engine is designed to be agile from concept to shelf. It's backed with advanced infrastructure, consumer highlights, and rigorous quality standards. In a noteworthy development, we have recently announced a capital raise of 161 crores through convertible warrants on a preferential basis. We are proud to have marquee investor Mr. Utpal Seth, a distinguished investor and a financial strategist. Also, our Chief Strategy Officer, Mr. Ankit, who's also participated in this round. The proceedings will be used for debt reduction, working capital enhancement, and accelerating our strategy growth. Their backing is a strong endorsement of our vision, governance, and a long. As we look forward to the future, our strategic priorities remain very clear: strengthening and accelerating our core categories, brand building and innovation, strengthening our new age business, Avatar and Pride of Cars, evolving route to market, and driving financial growth. We shall now open the forum for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. All participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Tarisha Shyam Sukha from Venture Growth Partner LLP. Please go ahead.
Hi, good evening. My question was on the lines of operations. So I see that you have delivered 13% growth in Q4 FY25, whereas our core categories like ghee, cheese, paneer has grown only by 18%. So overall, you're growing at 13, but these have grown by 18. So what are the categories that are growing slower than the company level growth rate, and what is the strategy on them? Hello, am I audible?
Hello, yeah. So to answer your question, our ingredient business that we supply to a lot of these institutions has degrown, which is majorly SMP. That's degrown by almost 9%.
Okay, and what is the strategy, to increase the growth here?
Sorry, we can't hear you clearly.
Tarisha, can you use your handset mode, please? There's a lot of disturbance on your line. Tarisha, please use your handset mode.
Yes.
We can't hear you.
Yeah, am I audible now?
Little better, but not very clear.
Okay. So I was just asking, since S&P has degrown by 9%, so what is the strategy on, helping this grow further?
See, overall, this ingredient business, the largely SMP skim milk powder, is more of a commodity. We have consciously, taken this call of because it is a very low margin business. So hence, we have consciously chosen this strategy of growing the other segments and more focusing on the core and the new age.
Got it. Okay. On the milk procurement front, for the milk that you're procuring from outside the farmers, how much is the direct procurement, without any middleman or agent?
So overall, you would have noticed that we procure around 15 lakh liters of milk daily on a daily average basis. Almost 2/3 of the same is procured through aggregators, and almost 1/3 is through our direct own network, through our BMCs, which is bulk milk coolers, and CC, which is chilling centers. They are more than 300 in numbers.
Thank you. Before we take the next question, we request participants to stick to 2 questions at a time, please. You may join back the queue for follow-up questions. We'll take our next question from the line of Sanjay Natwarlal Shah from Tanishta. Please go ahead.
Hi, thank you. Can you hear me properly?
Yes, please go ahead.
Yes, pretty much.
Okay, perfect. Thank you. Congratulations on the results and the presentation, which is quite informative. If I may just ask you to kind of gaze ahead over the next 12 months to probably 2-3 years, what's the kind of plan that you have or the aspiration that you have from a growth perspective, distribution point perspective, and the return ratios, ROCE, ROE? How should we think about the company? Just in terms of how you are kind of aspiring to grow.
See, while we don't give a specific yearly guidance, you are seeking for a next 12 months of growth strategy. But I think the way we have been growing at a CAGR of around 18% for the past 3 years, we can assume that we, of course, aspire to grow a little higher on the same, and we continue to grow on that CAGR with a clear focus on, again, the core categories, the new age business, and new products which we are likely to introduce and which we have already recently introduced along with that. So the objective will obviously remain.
Sorry, maybe I didn't place my question properly. We should, of course, ignore the next 6 months, 8 months, 12 months, but if you talk about a 2-3 year kind of a journey, where should we or how should we expect the company to evolve?
See, over in the last year, of course, there was a visionary statement given by our chairman for 10,000 crore mark. We always, of course, I'll ask Charlie to.
Yeah, so we've actually given a guidance saying that we'll reach 10,000 crores in the next 4 years. And yeah, that's the guidance that we've given. And if you see our past trends, we've grown by almost 18 to 20% CAGR. Hoping that it should continue.
And what could be the implication for the return ratios, just given the kind of growth?
You mean to say return on equity or capital employed?
That's correct.
See, of course, this is a resultant coming from improvement in EBITDA margins. So as we move along, and you would have observed that in the past 3 years, our EBITDA margins have moved up from 5.7% to 8.5% in last year. We continue to thrive on that, and we aspire to take it to a higher levels. But genuinely, we do not give any specific number-wise guidance.
Okay, thank you.
Thank you. We'll take our next question from the line of Vikram Shukla, an individual investor. Please go ahead.
Hi everyone, and thanks for this opportunity to ask question to the management. This is one of the company which I own since last 10 years, but practically I have lost money despite of being a consumer company. So I just have a few questions for management to ponder, right? So when you came with the IPO, you looked like not a probably milk company, but more of a value-added product. But when I look at your number, like from FY16, which was your listing days, actually, the sales has grown 9%, while your EBITDA has grown almost like 7%. And you know the reason for what it is. Basically, you used to make in FY16 9% EBITDA margin, and now it is 7.6%, where your salience of value-added product has moved up quite substantially, 40 from maybe 60-70% almost. So I don't understand that which way management themselves are looking to this business, that the sales has grown 9% and the EBITDA has grown 7%. I do agree that there are a lot of disruption happened. Second, I have a lot of question mark as far as the accounting policy is concerned. So if you go on a very, very long period of time, that your other income, if you go in other income, which has grown almost like 39%. But if I go a little bit detail on other income, 60 to 70% other incomes are basically livestock revaluation. And if other income has not grown this much, I think your profitability is lower than the EBITDA growth. But obviously that will reflected in your return on capital employed and ROC. So my first question is that no other company, whether you look at your peers, which is Heritage and Hudson, they do not have that much of other income. But you have a very specifically high other income, and very specifically, the other income 60 to 70% is driven by the revaluation of livestock. So this is my first question. I will probably take. I will ask say my second question after this answer. So why you have so much of other income? Because if I exclude the other income, probably your profitability has not even matched the GDP growth in last 10 years. Over to management.
Sure. I'd like to answer your question with respect to other income for the year FY25.
No, I'm not asking for this year. I am looking your number since last 4-5 years. In fact, I have looked at your number since last 10 years. So if I exclude the revaluation of livestock, probably your profitability has not grown in line with what even EBITDA growth is, which is lower than the sales growth is.
I would like to disagrey because our other income rather this year with respect to change in fair valuation for bio assets has reduced YOY. So in that sense, our EBITDA growth, if we were to exclude other income, our EBITDA growth is much higher excluding.
So my question is for 5 years, right? And this is the very consistent in your P&L, right? So let me give you, I do understand a lot of dairy business as well, right? So generally what happens that I know unlisted businesses where if certain livestock is giving more turnaround, then obviously you revalue because you can sell it at higher valuation. But here, I think the key business is selling the milk, not the livestock.
Yeah, I would like to. No, it is not the livestock. It is as per the Ind AS, we have to do a fair valuation of the cow, which is growing on an exponential basis and which is our core assets, and hence this other income which is flowing to P&L on account of accounting standard. And if you were to look at the year FY25, out of the total PAT, I'm saying, of the total PAT of 119 crores, only 11% is other income, which you are mentioning with respect to the biological stock valuation.
Your
So
other
it is
income
not
is still,
material to.
your other income is still 30% of your business, sir. So anyway, this is my first question, but still I'm not
So other
convinced
income has
about.
multiple parts.
Yes.
I want to clarify. The other income has multiple parts. When you get to the annual report, you will have all the schedule. But just to update you over call, it constitutes only 11% of the overall PAT, which is the biological revaluation. There are other incomes which you will definitely see in the annual report schedule.
Okay. Second is my related to. Yeah.
To join back the queue, please, as we have a lot of other participants.
I have asked only one question, madam.
Thank you. So we have a long queue, sir. If you can join back the queue, please.
Only one question.
Okay. Okay, please go ahead.
Yeah. So second is basically if I look at your operating cash flow, it is again remain very inconsistent. Whenever you have hold back to the payable, you have reported a pretty good operating cash flow, right? And whenever there is a payable has not been held back, you suddenly reported a very bad operating cash flow. So last 2 years is good. So is there any specific things which you have done, therefore your operating cash flow is looking very good, and how it will look like maybe 2-3 year perspective? Second, is it a sustainable?
Yeah, I would like to answer. See, for our operating cash flows, there are multiple reasons. One is, of course, the improved profitability, which is evident in EBITDA margins. Number two, it is mainly on account of reduction in the inventory, which we've shown the trend that from 72 days, it has gone down to 61 days. And there has been a conscious effort by the management, by the company, to take care of the operating cycle and operating cash flows, which is part of net working capital. So we believe that we are continuously thriving onto it. And with respect to your observation on trade payables are considering, these are relating largely mainly to milk vendors.
Fair. I will be in queue in case I have a different question. Thank you.
Thank you. We'll take our next question from the line of Pallavi Deshpande from Sameeksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. My question was on this expansion in Bhagya Lakshmi. So what is the, status there, and which breed are we looking for the cows? Because last time with Holstein cows, there was a lot of negative publicity regarding the type 1 milk and, I think also overall, as a percentage of revenues, it's not grown. It was in FY18, 3% of revenues, similar right now. So just want your thoughts on that. How are we looking at the breed and what are we planning?
Yeah, so we have very specific policy about the breed. We have Holstein Friesian breed, which is basically gives 90% of the global milk production. So it's a well-established breed, and we only take that breed as our herd. And today we have about 4,500 such cows in our Bhagya Lakshmi farm. And the way the breed is, we have our self progeny. So in coming 5 years, we are going to touch about 20,000 cows with the same breed of Holstein Friesian, which is very productive and very rugged breed in Indian condition. And now we are having a second phase of our farm, which is we have named as the Swarna Bhumi farm, where we have about 5,000 land, which is about 45 kilometers from the Bhagya Lakshmi farm. So that also is under process, and we have already completed a lot of sheds there, and cows have been transferred there. So maybe within 5 years, we will be having more than 20,000 cows of Holstein Friesian breed, which is, as I told you, it gives about 90% of the total global milk production of cow milk.
Right.
And we have more than 2,000 acres of our silage production. So we control the nutrition diet to these cows so that we get the best yield and the best quality. So this is also additional, arrangements we have done to feed these cows properly, so to get the best productivity out of these cows.
And
So that supplies to Bhagya Lakshmi only. That is 2,000 acres supplies to pride of cows only then?
Yes.
Our pride of cows is only the Bhagya Lakshmi milk.
yeah, so whatever milk from is used in pride of cows, all comes from Bhagya Lakshmi.
So it doesn't include anything from this 2,000 acres controlled this thing. My second
2,000
question.
acre control. Actually, I would like to clarify. We have two farms under Bhagya Lakshmi. One is the original farm, which is approximately 25 acres, and the new farm, which is a larger farm, is 500 acre farm, which both put together have 5,000 plus cows. I hope that clarifies.
Right.
Because when the number of cows are increasing, we have to set up new farms with a better technology.
Right.
That's what the new farm is coming. Yeah.
And the cows are also naturally growing, so we're adding approximately around 500 cows every year. Then it has a multiplier effect. Every year it keeps increasing.
Right. My second question would be, what would be the capex for the next 2 years, and what's the current utilization for the cheese plant?
Capital expenditure for next year?
Yes, next 2 years. And what's the current utilization for the cheese plant?
Hello, can you hear me?
Yes.
So, probably I was answering on the mute. If you were to segregate our capital expenditure, we can segregate the expenditure into two formats. One is the routine hygiene capital expenditure, which we need to incur on an ongoing basis for routine capacity expansion. Plus, The other format could be a large greenfield projects if we were to undertake. As of now, if you look at, we would be restricting it ourselves right now to limiting this answer to the routine hygiene capex. If you look at Bhagyalakshmi Farm as well, the majority of the capex is also completed. Most of the cow sheds are completed, etc. The farm is almost ready. So from that perspective, as we look ahead for the next 2 years, I think the routine capital expenditure, which was likely in the past, like around 40 to 50 odd crores, we can foresee annually 40 to 50 crores of capital outlay. With respect to your second question on the cheese plant, the cheese plant investment was already completed. It is fully operational, and now we are almost using our capacity. There will be a adjacency which we will bring in. So we are almost doing 98-99% capacity utilization. With respect to further capacity expansion, there will be only adjacencies which will be required with marginal capex and not like a full-blown capex for the entire new setup of plant, which we are evaluating.
And what would be the tax rate for the next 2 years?
Please, as we have other participants waiting for us.
Okay.
Thank you. We'll take our next question from the line of Raman TV from Sequent Investments. Please go ahead.
Hello, can you hear me?
Yes, please go ahead.
Yes, sir. So my question is with respect to the preferential issue. Out of the 161 crores you raised, how much will be utilized?
Raman, I'm sorry to interrupt. I can hear you, but it is not clear. Can you use your handset mode, please?
Can you hear me now?
A little better. Please go ahead.
Yes, we can hear you.
Okay. My question is, I have only 2 questions. One is with respect to the preferential issue. Out of the 161 crores which we raised, how much will be utilized to repaying debt and how much will be utilized for working capital?
So I'll answer this. Out of the 160 crores, we, as per the explanatory statement provided, we have mentioned 70 crores will be utilized towards debt reduction. Almost 40 crores will be used towards the working capital. Almost 20 crores will be used towards the capital expenditure, and the remaining as a corporate general purpose.
Okay. And my second question is, I have seen the presentation as well as the results. So I basically understood that there are 3 different the main areas. One is like the core, which is the core business, and then second is the new age business, which you are keen on focusing on, and the other one is milk and intermediate. So can I get margin of the core business and new age business?
Practically, this is the confidential information. Hence, we would like to choose not to answer on the margin front with respect to the category-wise margin.
Okay. I just wanted to understand, because you said you're focusing on core and new age businesses. Can you just give us the rough estimation of guidance with respect to 2-3 years? How do you see the core business turning out, and how do you see the new age business turning out? Because now I can see that 50% of the revenue is from core business and only 10 to 50% is from the new age. So can we see the new age business going up from 15 to 20 or 25%? And will the margins improve?
See, with respect to overall growth aspirations, specifically for new age, of course, it remains core to our heart, and we will continue to remain focused on new age business. But in terms of numbers, we do not give a breakup of how we are estimating our revenues. But we are looking at, as we have told to you overall, that we are looking at tripling our revenues in the next 4 years from 3,400 crores to almost 10,000 crores in the next 4 years. So, of course, we will be riding on this product portfolio. And maybe just to answer your question on the margin front, maybe indicatively I can share that the new age business margins are relatively almost 2x of the company's average gross margins.
Okay, sir. Thank you.
Raman, thank you. We'll take our next question from the line of Vansh from Renaissance Investment. Please go ahead.
Yeah. Am I audible?
There's an echo coming from your line, Vansh. Can you use your handset mode, please?
Yeah. Am I audible now?
A little better. Please go ahead.
So first of all, congratulations to the team and for the great set of numbers. I need to ask just 2-3 questions from my end. First is that I need to understand the category-wise, metrics. What are the top lines, EBITDA and PBT metrics for each category? I mean, there is no segment-wise classification that we are currently reporting in any of our presentations. Because we also need to understand what are the drivers behind this inventory, days decline. Which category is currently performing well? Where is our focus? What's our core category? Please, and if you throw some color on this, it would be great of it.
Sure. Thank you. Let me answer you. If you look at our investor presentation, we have given the entire composition of business, whereby it says that almost 57% of the business comes from the core categories. 17% of the business comes from ingredients and SMP, and liquid milk is around 10%, new age business is 6%, and others are 10%. With respect to operating profitability category-wise, we do not share any numbers with respect to operating margins category-wise. However, if you were to look at the trend, we can very well see that over the years, the EBITDA margins have improved from almost 5-6% to 8.5% this year in the last 3 years. And overall, that's what.
I'm asking is my major concern here is, yeah, we are reporting numbers, but you aren't reporting exact classifications in the lower end. I mean, no EBITDA-wise clarity and no PAT-wise clarity. That's one of the major. From our end also, from the investor's point of view, that's one of our major concerns. Which category is currently performing well and where we are lacking. And if it is something that you are showing, so like, why even
I would like to answer.
Yeah.
I would like to answer. See, if you look at the notes with respect to financial statement, we have already mentioned that we do not fall under the segment reporting, and hence we do not report the segment results accordingly. However, with respect to your question on the overall product portfolio, I think we have been consistent in our communication in categorically highlighting what is the composition of the turnover.
From corporate governance point of view also, sir. If someone wants to know, shouldn't it be our obligation also to
Sir, if you see, if you don't fall under segment reporting and all, but as a company, when we are projecting that we are a value-added business and we want to claim such valuation in the market, so if we want to say that we are only in the milk business, we will continuously carrying that valuation which the commodity business carries. If we are to value it, we need to know as an investor what are the top line which is coming from different categories, what are the margins in all these categories. So if we want to say that we are into premium category and we want to wholesale, then how do we do that? Because with these numbers there is no clarity which is coming on. And then how do we, if on the call, if you can mention at least, if it is not on the PPT or on from the accounting perspective.
Yeah, firstly, I would like to update you that there is no obligation to report the numbers segment-wise. Whether you benchmark any other company, if you were to even benchmark the Nestle.
No, sir, I'm not asking about the segment-wise. I want
to understand the categories. If you are saying that cheese business is going at this percentage, so what is the margin it is generating? What is your ghee business, margins look like?
Otherwise,
can I finish what I am saying? See, if you were to continue a Q&A like this, it will continue. However, please try to listen me and let me complete first. What I was trying to give you an example is, if you were to benchmark with other companies, no companies report the margins category-wise because it is a confidential information for the company. I just gave you a random example from Nestle because we will never know a margin, what margin Maggi makes or what margin Kit Kat makes. So let's not hold to the information. However, I would like to clarify very clearly that as a part of good governance, in spite of we not being obligated to report the breakup, we have been presenting our breakup of our composition of the turnover for the past few years. If you pick any investor presentation, you will get that information, which gives a good insight in terms of what is the core categories, what is the composition of the core categories, and how are the core categories performing. I think
then the investors will continue to, qualify you or classify you as a milk dairy, where you are buying at 60, selling at 62. How do we know where the value will come from? If as an investor I have to earn something by investing, I need to know where the value comes from, which business you are targeting, where and where is the growth coming from actually.
we have given you the guiding parameters and all the requisite information. We would not like to answer this beyond this further.
Next question.
Okay, so then there's no point. Yeah.
Thank you. We'll take our next question from the line of Naitik from NB Alpha Fund. Please go ahead.
Hi, sir. Thanks for taking my question. So my first question is, we generated highest ever cash flow from operations this year, almost 200 crores. But when I look at your balance sheet, we have not repaid any of it, used any of this 200 crores to repay debt. So why is that so, sir?
Yeah, if you look at the overall cash flow, I think on a consolidated basis, there has been a good amount of capital expenditure. So entire proceeds, if we were to dissect in two parts, one part is usage of the capital expenditure in the capital expenditure item, which is both for Bhagyalakshmi Farm as well as for Parag Milk Foods, largely. I think that completes all the capital expenditure obligations which were there in terms of whatever were the routine hygiene capex which were required. So it is almost close to 120 odd crores. Besides that, there is an interest outflow of almost close to around 80 odd crores, which takes out this cash flow from operating activities. So these are the two major usage of the funds.
Right, sir. Got it. And sir, another question is again on the balance sheet. So when I look at your other current assets and other financial assets, if I add them up, for the past 3 years, they've consistently been 450 crores. And, two major items within them is advances and, one of the other item is other current assets. So what is this, sir, and why is it keeps on at a 400 crore mark?
Sure. I think a good question. See, over the period, if you would look at the numbers been broadly consistent, mainly because while even though turnover has increased, so this number has not increased, which essentially means as the number of days of capital, it is certainly coming down. So overall advances has come down, as you have noticed rightfully. With respect to the other part of the assets, it is largely the receivable from the government, which is on account of the PSI and PLI incentives which government provides. So of course that cash flow is dependent on the overall larger cash flows from the state government or central government. So we cannot comment on that. But overall, I would like to highlight that NWC has come down over a period of time from 74 days to almost 62 days when we talk of NWC, which is largely in form of inventory, receivables, and the trade payables part.
No, sir. So my question is, so the advances that we pay, this also essentially becomes a part of our working capital, is it? Or what is this advances that we pay for? I don't understand what advances we are paying for here. Is it for some capital expenditure purchases or is it for our business? Or what is it for?
Sure, I'll clarify. But before that, I would like to update you that we fall under the highest category when it comes to the PSI benefits and the PLI benefits, which is provided by the government. Coming to your question on the advances, typically this is part of the customary practice more so with respect to procurement in the state of Maharashtra, whereby we make these advances to our milk aggregators, who in turn set up their own network and infrastructure and create their own network infrastructure to procure milk from the farmers, and we in turn give these advances as part of our normal or in the ordinary course of business, which continuously have a rotation in terms of the milk supplies as well as the fresh advances.
Right. So it is essentially a part of normal business and would probably be part of working capital. Okay. Got it, sir. That's it from my side. Thank you.
Thank you. We'll take our next question from the line of Chandresh Malpani from Niveshaay Investment Advisors. Please go ahead.
Hello. Am I audible?
Chandresh? Yes, please go ahead. Yes, please go ahead.
Yeah, thank you for the opportunity. My question is with respect to core categories growth rate. Like we have been growing at 17-18% volume growth year-on-year basis. So how confident are we on this rate of growth, and what underlying factors can the management provide us like for this rate of growth? Hello.
Management team, I believe you're on mute mode.
So basically, first of all, this branded dairy category is growing with a good healthy rate, and the people, they want unadulterated and pure products, so that's also creating a lot of growth. So you must have seen something on the branded ghee as well as branded paneer. So this is one of the pillar of growth. Second is that we strategically, we are expanding our distribution network. So about 3-4 years back, we were having only 15 warehouses. Right now we have around 29 warehouses, almost present in all the states. So basically, it is a natural demand for the branded good quality products as well as our distribution network expansion, along with the brand equity what we command, and because of that we have more demand for this dairy products. So these are the three pillars I would say will lead to this kind of growth.
Okay, thank you. Second question is with respect to the new age business. I understand providing EBITDA numbers is not mandatory, but can you give some sense on the profitability of it? Because it has started to contribute to the EBITDA, or has it reached the break-even point or not? And just sense on the.
Yeah. I think Ankit has already given an answer on this question. He said that all the new age business, the margins are double than the company's average margin. So this is what
That was on the gross level or.
Yes, gross level, yeah.
So yeah, that's what I'm asking, because of the amount of marketing and advertisement expenditure we must be doing on the Avatar brand and Pride of Cows. So has it reached that break-even point, or has it started to contribute to the EBITDA levels?
I will answer this question. While Pride of Cows is a part of a subsidiary which is Bhagya Lakshmi Dairy Private Limited, the financials definitely will be available to your perusal separately. You can go through it. The EBITDA, it is almost at a break-even EBITDA, definitely. Okay. We do not report EBITDA again at a category level. Having said that, brand promotion expenditure is a pool of expenditure which is rightfully allocated in terms of what is the need of the brand and what is the agenda, basically what is the intent and what is the season. So there has to be a certain format of consistency. The way you look at our participation in KBC, it's been 3 years that we have consecutively for 3 years we have been participating. But this year for Go Cheese, we entered into the house of Big Boss. So that was again a strategic call to enter from. So last year we did IPL, this year we did a Big Boss. So again, for the brand, it needed a different level of advertising, so it has gone in different segments. These brands like Avatar and Pride of Cows, which are new age business, are more digital brands. So the TG itself it needs a lot of influencers and digital marketing campaigns. So we continue to drive accordingly. So we have to look at overall pool of funds and how company is managing the operating aspects.
Okay, well, thank you.
Thank you. Ladies and gentlemen, in order to ensure that management is able to answer queries from all participants, please restrict your question to one at a time. You may join back the queue for follow-up questions. Next question is from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Yeah, thank you for the opportunity. Really appreciate you conducting the Concall. A lot of people have asked that before. So, on the milk procurement side, for the milk that we are procuring from outside farmers, how much of that is direct procurement without any agent or middleman? Yeah, first question.
Yeah, sure. We've answered this, but in a summary way, broadly, 2/3 of the milk is procured through milk aggregators, and 1/3 of the milk is direct procurement through our own set of BMCs and chilling centers.
Sorry. Yeah. Also, on the side of cow front.
Rishabh, I request you to join back the queue, please, as we have. Rishabh, I'm sorry to interrupt. We have a long queue of participants. I request you to join back the queue, please. Thank you. We'll take our next question from the line of Sanika from Sapphire Capital. Please go ahead.
Hi, am I audible?
Yes, Sanika.
Yes, please.
Hello. Yeah. Yes, sir. I just have one basic question. Is it fair enough to say that due to seasonality in the business, we should look at your business on a Y-on-Y basis? And can you explain why there's so much variation in the EBITDA margin?
Okay. With respect to seasonality, you will be looking at, while we are looking at growing our turnover, but partially your observation is there that with respect to there is some seasonal impact. For example, during festive demand, the consumption of ghee will be very high, and similarly, the cheese will be very high in winters as compared to April, May, June. But April, May, June again will be heavy on beverages and other product portfolio. So I think we have a group of good product portfolio, which that's why we are able to balance out our revenues. And you will look at almost our revenues have been hovering around broadly between 850 to 900 crores across the quarter. And this quarter we have exceeded 900 crores for the first time with 918 crores, marking this quarter as the highest ever quarterly revenues.
Thank you. We'll take Sanika, I request you to join back the queue, please. We'll take our next question from the line of Riya Agarwal from Bandhan AMC. Please go ahead.
Hi, am I audible?
Yes, Riya.
Yes, please.
Hi, thanks for the opportunity. I just wanted to understand that our margins on core categories, which is ghee and cheese, would definitely be higher than the overall milk product. I just want to understand that, as you mentioned, that your new business margins are two times the company's gross margin. So in that terms, if you can indicate what are the margins on ghee and cheese as compared to the milk?
I'm sorry, but we have just given an indication and we have not given a clear number in terms of what is the gross margin on the new age business. And that is too small a business of around 6% at this point of time. We have consolidated ghee and cheese to give you a number of 57% of the overall business as core categories to maintain, of course, to maintain an equilibrium between the transparency and protecting the competition sensitive information. So from that perspective, we will not be able to share again product wise or category wise margins.
Okay, but just can you validate that the margins in ghee and cheese are much better than the milk margins?
We will like to not to answer to that because overall we have to look at the overall margin management for the business. We are broadly around 25-26% gross margin business at this point of time, and we continue to strive to improve our gross margins as we look forward.
Okay, thank you.
Thank you. We'll take our next question from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, I had a question on your procurement prices. So they have increased by 3 rupees on a QOQ basis. So do you expect it to stabilize at current levels, or do you expect it to increase further going forward? And if you could just provide some perspective regarding, is this increase general inflationary increase, or there is a milk supply crunch in the country?
I would answer you on the overall operating margins. I think operating margins for the year has been hovering around 8.5%. Of course, plus minus few basis here and there. We will continue to try to achieve similar margins quarter on quarter as we move along. While there will be a inflationary impact, whereby during inflation, the impact on margins as a percentage versus the absolute profitability is little different, which applies to all consumer companies. So I'm not explaining on that aspect. Rahulji, if I request you to answer on the milk procurement.
Yeah, milk procurement, what we anticipate to be more or less stabilized now onwards, because this is, the milk is a seasonal commodity, and we have a supply-demand gap in the summers where milk production naturally goes down. So this year also, because of early summer, there was an increase of the procurement price from the farmer. So we have taken the call to increase the milk price, selling price. But what we see as is stable for next 6 months.
Thank you. We'll take our next question from the line of Amit Mehta from Classic Financial Services. Please go ahead.
Am I audible?
Yes, please go ahead.
Hello? Yeah, thank you.
Yes, Amit, we can hear you.
Hello?
Yeah, Amit, we can hear you.
Yeah. Thank you.
Yes, Amit, we can hear you.
To the team. See, I have a few questions. While the performance of the company has, improved, I want to understand why the inventory is, so huge, and in which category these inventories are being built up. Because, since we are in this perishable business, how can, the inventories be at this levels? And the second question, what I want to understand is the fair valuation that we are doing on the biological asset side. So I need to understand because, for last 3, 4, 5 years, which I have been looking at on your cash flow, the biological assets have been revalued, and they have only been revalued on the higher side. And then, they are going and sitting in your other income. So is the management or, trying to bloat the balance sheet or P&L to, overall match the profitability as per their expectations?
Sure, I'll answer the two parts. The first part is on the inventory side. We are more into value-added products, unlike a pure dairy company, which is more into liquid milk, because liquid milk has a different working capital cycle. So we have to convert the milk into the value-added form, and cheese needs a aging process. So hence, typically our inventory is largely in the form of the major portion of the business is ghee, cheese, paneer. So hence, largely the inventory is in form of cheese, which needs the aging of 6 to 12 months, depending on the type of the cheese. And the other form of inventory is more for in form of butter and the milk powder, because it is required and generated as we make ghee. Now coming to your question on the biological assets, this year you would see that biological assets valuation has gone down versus last year. Over the years, it has been increasing continuously because of the exponential in the cows.
Sorry, please go ahead.
Can I speak? Yeah. So over the years, when you look at the revaluation of biological assets have been increasing year on year, mainly because it is backed by the increase in the number of cows, and hence this kind of valuation. But for the year as a whole, if you were to look at
dry cows also, right? So you must be having dry cows also, right? So there is a seasonality where the cows go dry. So what are you doing on that front? Because all this revaluation that you're doing is sitting in your other income. And then
we understand that we are also.
It seems it is artificial, increasing the balance sheet size. See, as far as your question of dry cows are there, it is a natural cycle that cow will be dry for a few months, couple of months, and again it will be under the reproductive cycle. So it's not that cow is dry. Then you devalue. So we haven't seen depending on devaluation on that front. And there is no disclosure in the notes to accounts. And we are in the business of selling milk and value-added products.
Parag is not in the business of selling cows, right? Every year we keep on, increasing the fair value of business assets and biological assets.
Amit, I request you to join back the queue, please.
Yeah, I'll finish this in just one answer. We are giving a fair disclosure in...
At least answer this, no? Hello?
Yeah, I'm answering this. I'm answering this question. Please allow me to answer.
Yeah.
So we are giving a fair disclosure in terms of notes to accounts. The valuation is done by an independent certified valuer. It is not a management estimate on which it is made as an income. And just to apprise you, the overall increase has been backed up with the increase in the number of cows and increase in the actual milk which has been produced at the farm, which has increased over the period, and now it is almost close to 50,000 liters per day. So there is of course science behind this valuation, and it is done under the Ind AS accounting standards only. However, just to apprise you again that this year the income has decreased on a year-on-year basis, and it is not growing that every year this income is growing.
Thank you.
We have been into our expansion phase of our Bhagyalakshmi project, which also I missed to, because now the farm is ready operational, so there has been a constant increase in the number of cows.
Thank you. Request participants. I'm sorry, go ahead, ma'am.
It's okay. You can go on.
Yeah.
Request participants to stick to one question at a time, please. We'll take our next question from the line of Mihir Dhami from Sharekhan. Please go ahead.
Hi, sir. Thanks for the opportunity. My question was on the Avatar brand. As in, what is our strategy to grow that brand? As in, how do you see the industry competition in pricing? As in, pricing-wise, I've observed that you all have increased the pricing almost twice in the last 1 year. So just wanted to get to know strategy on how you're planning to grow it.
So basically, if you know that around 76% of India is protein deficient, Avatar, we started as a sports nutrition brand, and now we are also, getting into and pouring into, and it's becoming really popular with people who are fitness conscious. If you see, we've also launched a protein bar, which is to be consumed not just by the sports nutrition, but also by common people who are, a little more health conscious. If you see, the brand has grown almost 6 times in the last 3 years, and we'll continue to do and give marketing support for the brand, and we'll soon get into newer formats of protein as well. Instead of just being a sport nutrition or a powder format, you'll see newer formats of the protein coming in.
Okay.
We'll take our next question from the line of Prasun Vijay from Vijay Investments. Please go ahead.
Hello. Am I audible?
Yes, we can hear you.
Hello.
Yeah, we can
Hello.
hear you.
We can hear you.
We can hear you well.
Hello. You can hear me? So what is the level of debt that the company has on the balance sheet, and what are the off-balance sheet items on the borrowing side?
On the borrowing side, of course, the net debt of the company is 561 crores. It is a gross debt less of all the fixed deposits and the cash balances.
Ladies and gentlemen, we'll take that as the last question for today. I now hand the conference over to Ms. Akshali Shah, Executive Director, for closing comments. Over to you.
To summarize, in Parag Milk Foods, our past has been challenging. We've overcome this past by corrective actions like building a strong team. We've recently hired almost 10 plus CXO in every department in the last 24 months. Deloitte was appointed for internal audits. We've also become cash positive from operating this revenue in the last 2 years. Yeah. We also hired a top consultant for cost optimization. If you see our new product development that we're doing have a gross margin which is double of company's average gross margin. And if you see the list of investors, we have marquee investors like Sixth Sense, IFC, and now Mr. Utpal Seth. At Parag Milk Foods, we are not just in dairy business. We are an integrated ecosystem trusted by millions of lives every day. Whether it is farmers who start their morning with us, the consumer who chooses our products for their family's nourishment, to our partners and investors who share our vision, each stakeholder is a central to our journey. We truly believe that Parag is rooted in tradition and now leading the nutrition. Backed by a strong infrastructure, innovation-led brands, deep market insights, and a forward-looking leadership team. We are confident in our ability to not just lead India's dairy and FMCG space, but to emerge as a global force in nutrition excellence. Thank you once again for the time, your trust, and being able to be a part of our exciting journey. Thank you.
Thank you. On behalf of Parag Milk Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.